Crypto exchange Coinbase is slashing around a fifth of its workforce as it looks to preserve cash during a crypto market downturn. The exchange plans to cut 950 jobs, according to a blog post published Tuesday morning. Coinbase had roughly 4,700 employees as of the end of September, after already cutting 18% of its workforce in June, citing a need to manage cost and growing too quickly during the bull market. Cryptocurrencies have plummeted from record highs over the last year. In April, one Bitcoin was worth $45,000. Now it is trading at $17,000. For more on this now, let's go to Naeem Aslam, who is AvaTrade's Chief Market Analyst in London. Naeem, many thanks for being with us today and trying to dissect what's happening to the crypto market. So we've seen these markets really being rocked in recent months after the collapse of FTX. FTX was really the world's second largest crypto exchange, right? A drop of 60% in its price in around 9 months. Do you think crypto can resurrect from its ashes at this point?
I'm going to answer that question by stealing your comment earlier. Crypto never fails to surprise, and that is a really answer for this entire space. Look, there are a number of factors that we have to pay attention to when it comes to crypto markets. Do we have less bad players in the market today in comparison to 2022, 2021, or 2020? The answer to that question is yes, because every day, every quarter, we see more and more bad actors being flushed out of the system, which is good for the entire ecosystem. Number two, and the most important one is, are we more closer in terms of getting a very firm regulation from the SEC and from all of the regulators around the world? The answer to that question is yes, the scrutiny is increasing and more serious actors are coming into the place. Now, if you were willing to buy Bitcoin at $60,000 or at $68,000, why wouldn't you consider it buying it at $16,000 price level now, when you have a less bad actors and more greater chances of a better regulatory environment?
I totally see your point, Naeem, and it's interesting when you talk about the bad players, and who are they really? Are we talking about retail investors only being the bad players, and the fact that we've seen a lot of institutional investors now entering the space? Is that a good thing at all for the market?
Yeah, I would say, look, the investors, retail investors have never been a bad player in this one. It's the service providers who've always sort of a duck and dodge investors in this particular space because of greed. If I am a custodian of my clients, it is my fiduciary responsibility not to use their funds apart from the reason what they have given it to me. If it is advised, or if the client takes a position, right, and then knowing the risk, then that is client's perspective. But as a custodian, it is my responsibility to pay attention to my fiduciary duties, and that is, if someone is depositing their cryptocurrencies, they should be able to withdraw it without any problem and without me hindering the process by using their money and then trying to make money based on their collateral.
It's worth keeping an eye then on the service providers and the ecosystem around crypto. Naeem Aslam, many thanks for your analysis.